So everything on Everpedia comes from somewhere else on the internet, kind of like Google search in that respect. And unlike Wikipedia, on Wikipedia you can use weirdo old books as citations that no one can even verify your citations. So on this, you've got the little number next to everything, and that tells you where on the internet it came from. And if something doesn't have a number, it gets deleted. So everything just has to be aggregated from elsewhere on the internet. It makes it pretty much impossible to lie because you can instantly verify. And then if you're putting up fake information that's not cited, you get banned. You get banned from the site automatically. We don't allow anonymous edits, unlike Wikipedia. So it's kind of weird. Like Wikipedia is both way too pushy, and they're not doing a good job of policing it. So it's bad in every respect. Whereas we we keep you on your game. We know who's adding what, and if anyone's messing around, we get rid of them. But then as long as you're just following the rules, anything you put up is A-okay. Well, so pretty much everything corporate we've been doing is based on the rubric of my last website. My last website is genius.com, and it's doing pretty well. It's rumored to be worth around $1 billion, and they've raised $60 million from some big-time people, including Ben Horowitz and Dan Gilbert. So right now, our traffic is about commensurate with Rap Genius when it was in Y Combinator, which we're about to do Y Combinator. And then the dream is for someone to step up the way that Ben Horowitz was the first person who did an equity round for Rap Genius. He gave $15 million, he took a seat on the board, he made it his baby. So that's kind of what we're looking for. It might be kind of cool to not have an American investor. Like a lot of the people we've been talking to, the big institutional people, are in Dubai and China, believe it or not. Which makes sense, right? Because we think this could be, we think just the Chinese traffic for this site could make it one of the biggest things of all time. But we'll talk to anyone. Everyone who's invested in our company so far has been very, very helpful. They're trying to spread the word. They contribute to the site. So anyone who can make an argument for us about why they really believe in our vision and they'd be willing to contribute to the site, either contribute content or press or backlinks or whatever. We just want to grow the family. What's the most important for us is for this to become the biggest site of all time. So if anyone really shares our vision, we can find a way to get you involved.
Last February we bought DMT. The coatings we put on our knives and scissors are harder than the sharpening stones that you traditionally can buy. DMT had a diamond-based surface, and it was proprietary. So when we bought that, we started to pair it with, for example, the scissors that I passed out. Those are carbonitride scissors. They're 50 times harder than stainless steel. You can't sharpen those with a traditional stone, but you can with DMT. So this was a company that was about $6 million in sales when we bought it in February. 2 days after we bought it, we landed placement in Walmart. We knew there was a review going on prior to closing, but we closed, and this never happens. We landed an extra $1 million of business right out of the box. Within months, we had landed another $1 million at Home Depot. And the DMT tools are used to sharpen things like saw blades and chisels. We've got 50 patents and trademarks on this, and the vision is to pair the DMT sharpeners with all the knives and cutting tools that have our coatings and bring it worldwide. So unlike some of the companies here that are looking for some pretty expensive capital, ours is almost free. Net income will do over $5 million this year. That's up from 2.5. And we exceeded the forecast for the first 6 months. I revised the projections. The last projection we had on earnings per share is $1.55, and that's up from my revised number of $1.38. So we're $1.48. So we're exceeding the guidance we've given to the street. There's the dividend history. We've been compounding that at about 11% annually. And about every 6 quarters or so, we raise it. We're positioned for another record year, $120 million in revenues, $5.6 million net income. earnings per share $1.47. And there's quite a probability that that may increase. The customers are a who's who. In the office channel, Staples, Office Depot, United Stationers. In the mass market, it's everybody. Walmart, Target, Kroger's, CVS, BJ's, Amazon. And then, of course, in the hardware market, Grainger, McMaster Carr are the industrial distributors, Grainger being the largest in America. Then Lowe's, Home Depot, and Menard, and the fishing guys, particularly West Maria.
So we're in rye freight, which is what you see on the left. We also do service and cargo vans. So we're into products that would be typically used in a construction application by a plumber or an electrician working on a job site. You see the refrigerated bodies. Again, there we use Thermo King to carry refrigeration units. Again, the application there is primarily food and beverage. And then the stake bodies, which is more of a construction industrial application. All of our 5 plants across the U.S. have the ability to make these bodies. Chassis are supplied to us by the chassis OEM, and they pass through. We never own the chassis, so they come to us on consignment. Light duty comes out of a consignment pool that we work with GM and Ford on. The medium duty, those chassis are drop shipped by the medium duty chassis OEM, which would be Freightliner, International, Navistar, Zuzu, and Hino are the primary ones. We also produce a line of specialty vehicles, primarily for military and cash and transit, so most of those are armored. We have a Department of State security clearance at our facility there, and that contract is typically a 10-year contract with the DOS. It expired in 2012 and was extended a couple years, and it's being renewed at this point in time. So we expect that Department of State contract to be back in place for 2017, which should put us in a good place to capitalize on that opportunity. I talked a little bit about the trolley product line that was stranded when we sold the shuttle bus business. We have sold that to a strategic acquiring company, and we're building out the backlog, and that will be completed at the end of the year. We have a fairly diverse customer mix. We talked a little bit about the national rental fleet accounts, leasing companies, and then medium duty and light duty chassis dealers. When you look at the mix of our accounts, and this is for the first half of 2016, 45% of our accounts are under $3 million. So we have a lot of accounts that fall into that small account retail section. So we also have some seasonal demand peaks, typically in the first half of the year with the rental fleet. But all in all, our exposure to any one particular account is pretty limited.
As you can see, quarterly in 2014 is kind of historically the way the company's always been from a sales standpoint. Q2 is always our largest. In that number, we have the rental fleet that Mark talked about. So we do roughly in the third and fourth quarter of the prior year, we'll be in negotiations with the top 3 rental companies on what kind of business they'll do. That will be over and above our normal retail business. And so we peak in Q2. Normally Q3 is kind of our next strongest. As you can see, that's changed somewhat. We had things picked up in Q4 of 2015. So our normal peaks in the middle has changed out to Q4 was a stellar quarter in 2015, not only on top line but on bottom line. And then from there, we've increased to the point that the trailing 12 months we're at almost a $300 million run rate. From a margin perspective, considerable improvement, consistent improvement again. And then as you can see, the first half of 2016, we've averaged 23.1%. So significant improvement year over year. I believe the last couple of quarters, year over year, we've improved 500 basis points over the prior year's quarter. From an income standpoint, this picture is a little bit distorted, but really as I came in, we had had roughly 4 years of losses, the last being which of 2010. 2011, 12, and 13 had no tax on them, so they're a little distorted because we had tax loss carry forwards that we were working through. So if we normalize those, there's been a continuous trend of improvement to where we are, through 2015. EPS has been the one that's been the most gratifying for me as we've been working through. We had no real consistency from an earnings standpoint. EPS, generally fourth quarter was always a loss for the company. We finally, through 2011, had the last 2 quarters of profitability, and from that point on, we've not had a losing quarter. Came close in the first quarter of 2014. Again, that was our bad quarter. But as we talked, 2015's fourth quarter, that was essentially almost 3 times what the prior fourth quarter was. But again, with the earnings of 8.3 in Q2, almost 50 cents a share. We had a number of one-time items that impacted that as we were cleaning up some additional items.
Hillary or Trump, who's better for your business and your view on the market and the economy?
For those of us who are old enough to know that Walter Johnson was a famous baseball pitcher of the Washington Senators.
I saw him.
But it was a different Walter Johnson, right?
Yes.
How old would that one be at this point?
Oh, this guy would be 100.
Yeah, 120 then. Okay, just a brief introduction. By the way, are most of you who are here, I know we've got investors, we've got a CEO here. Are you guys analysts for buy-side firms or that sort of thing? Yeah? No? What do you do? You're an investor, okay. I just want to have an idea of who we're talking to. And you're with?
Marketing. I'm in financial marketing with small companies.
Okay. So I'm with Sabrian Systems. I'm president of Sabrian Systems. We've been doing quant models, multi-factor quant models, guard, value, insider type models for a long time. We have indexes for ETFs. We do portfolios for your investment trusts. And about 5 years ago, we acquired a firm called Gradient Analytics that does the in-depth forensic accounting work, digging into the 10Ks, the 10Qs, financial statements, trying to see if what the CFOs say at these conferences, if the earnings are really as growing as well as they say, or it's all built on accruals and unusually low effective tax rates, or stretching out their amortization schedules and that sort of thing in order to keep depreciation expense down. So Gradient helps us vet the positions that we identify for portfolios, but they also do short selection. So that's just a little bit of background about Sabrian Systems, Gradient Analytics. And one of the things that we're finding in the marketplace is that since 2009, when the Fed basically was tasked with the role of stimulating the economy because the government could not agree. Obama said that he had a mandate from the voters, and Congress said they had a mandate, a Republican-controlled Congress said they had a mandate from the voters, and they couldn't do anything with fiscal or regulatory reform or anything like that. So the onus was entirely on the Federal Reserve to stimulate the economy out of its malaise after the financial crisis. And that worked great for a while from the standpoint of asset inflation. Wasn't creating price inflation so much, but asset inflation, stock market, bonds, even real estate is kicked into gear. But at some point, that's not good enough, because when your earnings are really growing because you're able to borrow, issue corporate bonds, you're a company, you issue corporate bonds at low rates, then you buy back stock, and that boosts your earnings, and that sort of thing. So that worked great for a while, however, and you saw really all boats lifted. All boats lifted by the rising tide of 9, 10, 11, 12, 13. 2012, we were putting out a portfolio with Gradient Analytics helping us to vet. And this was our annual portfolio. We had no losers whatsoever. We tripled the market return. 2013, we had no losers whatsoever. We doubled the market return. 2014, we had a good year as well. 2015, things started to get to the point where, maybe the market valuations, that the multiples are getting pretty high. And you see what happened in the middle of last year. It became a more news-driven market. It became really all about what China was going to say about growth not tailing off. It came about healthcare under attack, and healthcare was the only place we were really seeing any price inflation, and that was under attack by the election cycle. This populist message was starting to take hold because the wealth gap was growing. We have nothing but asset price inflation and not really wage inflation. The wealth gap increases, and people start, as Larry Kudlow was saying today, people start to get frustrated. It's like, I'm not participating in this, in what I see, it looks like everything is good, but it's not good for me. And people start to get kind of upset with that. Middle of last year, like I said, China was talking about bad things, healthcare was under attack, and the Fed was talking about starting to tighten and draw in the quantitative easing that had been the only stimulus that we had had. So we had accommodative monetary policy on the one hand, but on the fiscal side, it was pretty much nothing was happening. It was basically, relatively speaking, a tight fiscal policy. No regulatory reforms. Nothing was happening there.
Clearly, Dodd-Frank, Trump is talking about repealing Dodd-Frank. And that would be great because Dodd-Frank has really caused the depression. I've been in the markets for 40 years and I've never seen the small cap market more depressed in 40 years. And that goes all the way back to 1977. And to give you an example, my first stock that I bought was Geico at $7 back in 1978. And Warren Buffett was buying it at the same time. He wound up buying the whole company, but they were really depressed back then, but they're more depressed now than they were then. And the reason why is because Dodd-Frank made purchasing brokers criminally liable for recommending single stocks that go down. So this is the first time in the history of our country that Dodd-Frank, that we had a law. So what happened is all the brokers, and since if you look at the trend line in the microcap market, when the SEC started implementing Dodd-Frank in 2014, it started going straight down. And it's gotten worse and worse and worse. And everything that I'm tracking, I don't care how good they are, they're all trading at 10, 15-year lows, everything that I'm looking at. And so Dodd-Frank has really been the menace. However, the problem is Trump wants to repeal it. So Trump would definitely be the favorite for the small caps, okay, over Hillary, because he's already said he wants to repeal all these regulations. And so what I did is I said, you know what, I'm going to go out and recommend 100 of them. And that's exactly what I'm going to do. I'm going to recommend 100 of these small caps I created a brand new newsletter called Trophy Investing just to recommend them, because I want the credit when they all double, triple, and quadruple off the bottoms. You know, that's what I want. And that's what I'm going to do. I'm going to go out on the line and recommend these things, and it's going to be social media that's going to bring the small caps back. They're not dead. It's just Wall Street will never bring them back. That's what's going to happen. The brokers are never going to see. It all happened when I got in the business. You know, the doctor or the lawyer would give their money and they say, listen, we want to put our money in IBM and Google and all this. Well, Google wasn't back then, but IBM and Polaroid, and Eastman Kodak and all those companies. But I've got some mad money on the side, 10, 20 grand, that if you see a small, low-price stock that's really a player, give me a call. That's the way it always worked. But now with Dodd-Frank, the brokers are scared to death. They won't even let you. In fact, I had a friend of mine I got in the business, 37 years he's been in the business. I called him and said, I got a great small cap for you. He said, we can't buy him. In his own account, he can't buy him. Cannot buy it. They won't even let the brokers buy them in their own accounts now. That's how bad the regulations are.
The market's going up, right? It's going up. It's been going up for really September, August, worst months, and the market's going up. They look like they're going to go higher. It looks like risk is coming back in the market, and the closer we get towards the election, the more it becomes obvious that someone's going to do a lot better job for the economy and make it a focus, whether it's Hillary or Trump. So I'm encouraged.